Imagine a country so small you can drive across it in less than an hour. It has no massive oil fields, no Silicon Valley, and a population smaller than many mid-sized cities. Yet the average person here earns more than most doctors, engineers, and CEOs in the world's largest economies. This level of wealth isn't a historical accident or a stroke of geographic luck. It was built through a highly calculated economic strategy. This raises a critical question. How does a nation with no traditional resources engineer itself into an untouchable global economic fortress? For centuries, Luxembourg was defined by its struggle for survival. Its location made it a constant target for invasion, and its economy relied on the grueling physical labor of the steel industry. After World War II, the government realized that a microstate could never win a competition based on manufacturing volume or cheap labor. They pivoted, abandoning traditional production to focus on becoming a magnet for international capital. This vulnerability forced them to prioritize the management of global wealth over the manufacturing of physical goods. To attract that capital, the government engineered a legal framework defined by predictability and business-friendly regulations. They created the institutional stability that global investors prioritize above almost everything else. Once these laws were in place, the world's largest banks, investment funds, and insurance giants moved their operations into the country. These institutions now manage trillions of dollars in assets from within Luxembourg's borders. By turning its legal code into a reliable product, the country successfully manufactured its own core economic asset. Luxembourg used its position between Europe's largest economies to its advantage. It provides frictionless access to the markets of France, Germany, and the Netherlands, making it a natural hub for international headquarters. This location is supported by a multilingual workforce, fluent in Luxembourgish, French, German, and English, allowing companies to communicate across the entire continent from a single office. The state reinforced these advantages with heavy investments in physical infrastructure and ultra-fast digital networks to support global corporate operations. Removing the logistical and linguistic friction of international business has proven to be as lucrative as any natural resource. Relying on a single sector like banking is a high-risk strategy, as market slowdowns can destabilize an entire economy. To mitigate this, Luxembourg is aggressively expanding into the tech sector, specifically targeting fintech, cybersecurity, and artificial intelligence startups. They have even committed significant national resources to the space industry, focusing on satellite technology and potential asteroid mining. You can see the scale of this investment in the countryside, where massive satellite arrays facilitate global communications. By operating like a diversified investment portfolio, the country builds a buffer against volatility in any single industry. This concentration of wealth has made the country exceptionally expensive. Housing costs are now a significant hurdle, even for highly paid professionals. This has created a unique societal structure. Hundreds of thousands of workers live in neighboring France, Germany, or Belgium and commute across the border every day to access Luxembourg's high salaries. This daily migration is essential to the economy, with regional transit networks moving a massive portion of the workforce in and out of the hub every 24 hours. The nation functions as a hyper-efficient economic hub, fueled by an imported regional workforce. Success was built on 3 pillars: engineering stable laws, optimizing a central location, and diversifying into future technology. This performance challenges the idea that a nation needs a vast landmass or deep natural resources to achieve global economic influence. In the modern world, agility and long-term planning are the most valuable resources. Luxembourg proves that even a tiny player can secure a dominant position in the global economy through sheer foresight.